USOTY. See what the bond market is doing. And, we'll start from the monthly time frame to real-time analysis. I want to look at the structure as a feed extension to see what these guys are actually doing. I think the US 2-year government bond continue to drop, continue to drop. The issue right now is the current tariff war will most likely create a strong imbalance in world trade. And let's not forget that China and Japan, they are the two heavyweight Asian power, and they both hold the highest US Treasury security. As of January 2025, China holds approximately 760.8 billion in US Treasury securities, and that makes them the second after Japan. So we begin to look at the potential effect of cashing out because now everybody is looking for statistical advantage. The United States is unpleased, it's not happy with the trade balance between its economy and China. Yes, we all understand the Chinese strategy of technology grab, dumping of, doing all manner of things is, I could say, I mean, we don't want to talk about that, but everybody has rights to protect his economy. But we must look at the potential scenario of China cashing out as a weapon. So everybody retaliates on tariff, slamming 135, slamming 145, slamming 80%. Everybody's slamming tariff on each other. The truth remains that China needs America. America is a consuming economy. So to shift away from it's impossible for China to do without America. But let's look at it. China sold off most of its treasuries and are investing in gold. Are they planning to back Chinese yuan in gold? Nobody knows. If Chinese yuan is backed by gold, that could really mean a lot for the price of gold. Lately, we've been seeing the price of gold, and we are foreseeing that gold could reach $10,000 per ounce. $10,000 because if they cash out over close to $1 billion of treasury security, they want to sell out. Of course, they must get their money. You can't tell them they won't get their money. You can't say that. So if they decide to do so, that means that they will have to invest that money in a different alternative. But it has a ripple effect. So we must also look at it that you know interest rates are just something that when you are investing with the government, it's a little bit fixed. It has a lot of security, and selling large amount of U.S. Treasury could lead to increased interest rate as the supply of bond increases and the demand increases. Higher interest rates can slow economic growth by making borrowing more expensive. The volatility it brings is enormous. Such action could cause market volatility, potentially impacting stock prices and investors' confidence. And we're already seeing it. We're already seeing what's going on with the stocks. So it's not going to be a win for anybody. The Chinese economy will also feel the impact. You know, we must look at it in terms of currency management. Reducing treasury holding could help China manage its dollar reserve more effectively, potentially supporting its currency, the yen, by reducing dollar exposure. But how about economic diversification? Cashing out will allow China to diversify its foreign exchange reserve into other assets or currency, which might be seen as a strategic move to reduce dependency on US dollar. And majority of the place where I see this money will come in might come in into gold. China will not want to buy British pounds. They will not want to buy Canadian dollar. They will not want to buy Russian ruble. They want to invest this money in gold. And in turn, they might decide to back their currency with gold. These are things that we are foreseeing, and we do not want to see that. But most likely, that this trade war is not going to favor anybody. Because at the end of the day, if China decides to cash out, their economy is also going to be in a very big trouble. The Chinese economy will be in a very, very big trouble if they decide to cash out. So I believe they shouldn't go into sell-off of treasury bonds as a retaliatory measure. They should continue on tariff and avoid tampering with their treasury bond reserve with the United States. If they do so, that will be the end of Chinese economy. They are going to regret it. From economic perspective, I've weighed it and looked at it and see what it's going to do. Yes, the highest they could do is they begin to invest in heavy metals. But I think the US government 2-year bond yield might continue to come down after seeing a breakout in 2018. I mean, a breakout from this descending trend line which we had. We broke out from 2022. There's no retest, and most likely the current war might lead to heavy bond holders to cash out. Japan might decide to reduce their holding. China might decide to reduce their holding. If they do so, then the bond generally, the 30-year bond, 10-year bond, 2-year bond might experience a drop. And from this level at zero point 0.7 level, which is possible, I first of all foresee the golden ratio level where I see a potential break. And if that doesn't hold, then that could technically set up a more bearish drop where we'll see a reversal in price. So this is just my analysis about what's going on, and I'm looking at it, and my analysis are based on the current geopolitical tension. There's actually very strong tension among two superpowers. It's all about political influence. It's all about political influence, and I hope that the Chinese and the Americans can reach a compromise and settle. But if they don't, and it becomes a battle of supremacy, China is going to lose in a whole lot of ways. They are not going to win this war because they need America. They need American economy so much, and we hope that they could reach some level of negotiation and play along. It's all about negotiation. So once they have a fair negotiation, everything can be normal. But this is what I see for U.S. government 2-year bond yield. And should Chinese decide to cash out, it's okay, but their economy is going to suffer a whole lot. They are going to suffer a whole lot. They are going to suffer a whole lot. So that is what it is, and I hope the Chinese don't go in that direction. If they do so, it's up to them. They're going to bear the cost. They're going to bear the cost.